in the last few quarters, Amazon's really ramped up their logistics spending, building more warehouses and getting more inventory closer to more people. That's going to benefit their business long-term in tremendous ways.
Hey gang, it's Tuesday, November 16th. Andrew and listeners, welcome to the Behind the Numbers Daily, an eMarketer podcast made possible by Tenuity. I'm Marcus, and today I'm joined by one of our principal analysts on the retail and e-commerce team, it's Andrew Lipsman.
Hey Marcus, let's talk earnings.
Hey buddy, let's do that. First, quick fact for you. The closed door button in elevators is designed not to work sometimes. Most of the door close buttons that we all furiously press when we get inside the elevator or the lift in the US, most of those buttons in US elevators don't actually work. That's because when the Americans with Disabilities Act was first passed in 1990, certain requirements for elevators were outlined, including one that said elevators had to make sure that someone with a disability would have enough time to get inside. So elevator doors must remain fully open for at least 3 seconds, and thereby preventing the closed door button from cutting that time short. Some elevator makers just deactivated the button entirely. There are some exceptions to this. As the New York Daily News noted, New York City elevators are required by law to have working closed door buttons, even though some operate on a long delay. Also, closed door buttons are fully functional in most elevators in the UK, according to the British newspaper, The Telegraph.
Marcus, can I just say, you just made my day with that factoid. I did not know that. I was going to say, that is one of the most frustrating experiences. Why do they do that to us? And it turns out there's a really good reason, the Americans with Disabilities Act. I feel so much better about something that until now had really annoyed me.
Yep, same. But also, why have them there anymore in the first place? The ones that don't work. Apparently, Harvard psychologist Ellen J. Langer told the New York Times that perceived control is very important and that placebo buttons serve an important psychological function in society. So anyway, now we've explained that myth and that intense frustration for everybody. Time now for some Amazon. Okay, Andrew, we're talking Amazon today. Q3, how did they do? We'll go through their highlights. We'll fill in some blanks. You'll throw some grades around. And then we'll move into in other news in the second half of the show. 3 stories for you there. Let's start with the highlights for Amazon's Q3. Total net sales hit $110 billion, up 15%. 1-5. Let's go through some of the line items. 45% of that $110 billion that Amazon made came from selling things on Amazon. But growth was 3% year on year in Q3 for that line item. 22% of the pie comes from third-party seller services, up 19%. Nearly 15% of the money Amazon makes comes from AWS. That was up a strong 39%. 7.5% of the money Amazon makes comes from subscription services, up 24%. Another 7.5% of the money Amazon makes comes from other, which is code for advertising. That was up 50%, 50, very strong indeed. And then finally, the remaining 4% of the money Amazon makes comes from physical stores, up 13%. So Andrew, Amazon's overall revenue figures in Q3 were blank.
Underwhelming, but predictably so.
Tell me.
It was seen as a very tepid earnings report. I'm probably being charitable by saying tepid.
Yep.
And really, it's causing some concern for what to expect in the next couple of quarters. I found this, so they missed on the top line by just a little bit. They missed on the bottom line much more significantly. But the reason I say that it was sort of predictably so is Amazon has done this in the past where they almost kind of pick a quarter to be their weak quarter. They've been shifting around Prime Day here and there. This year it went into Q2. So it was not in Q3 like it normally would be. Obviously, there's a lot at stake in Q4, so they're always going to gear up for a strong Q4. So I think that, what I kind of liken it to is when somebody's coming over and you're trying to tidy up your house and you're grabbing a bunch of things and you're looking for a place to put them. And you just want to make sure that the main rooms look okay. And you just take that one room in the back and you throw everything in there. I feel like that's kind of what Q3 is for Amazon this year. Some of the concerns are also around Q4 guidance, but I would say Amazon has historically been very, very conservative with Q4 guidance, and they always overperform. So, until they show me differently, I'm expecting that to be the case. So I tend to look at this tepid Q3 and say, it's more of a blip than a trend.
Okay. We'll come on to some more about the Q4 guidance in a second. But yeah, I mean, they did hit the top end of their guidance. They did say 10 to 15% growth for the Q3, and they hit 15%. It's still the slowest sales growth in nearly 7 years. But look, put another way, it's the fourth consecutive quarter of making over $100 billion, which isn't bad. Andrew, there, as we mentioned, the 3% growth of their Amazon online sales. So 45% of the money they make comes from selling things on Amazon. Growth went from 38% last Q3 to 3% this Q3. Actually, their share coming from this line item went from 50 to 45 as a result. What's behind this and how concerned are you?
Comps, comparisons to last year. So during the pandemic, right, up until Q2, when Q2 was the first quarter that we started to lap the pandemic quarters. Prior to that, Amazon was running at growth rates in the high 30s and 40s. So we knew, so basically Amazon grew about 2.5 years in 1 year in 2020. Think of it that way. We knew that comps were going to get tougher. We saw in Q2 that the online stores business was up 13%. So we knew it was going to start coming down. And, I fully expected it to be in single digits here in Q3. Low single digits, though, is a little bit of a surprise. So that is the single data point that I would say is most concerning, though I would anticipate that things would turn around a bit here as we get into Q4.
Mm-hmm. You mentioned that low single digits, that 3% being concerning. Were there a couple of other interesting figures from their Q3 earnings that jumped out to you?
Yeah, so let's look at some of the highlights. Actually, the first one, I'll say the ads business, and I'll actually take both sides of the coin here. So as you mentioned before, it was up 49, 50%, depending on if you're excluding the foreign currency effects. That's a really strong year over year growth number. And in fact, in the prior Q3, it was also up 49%. So to basically double up that growth rate 2 years in a row, to me, is really impressive in context.
Yeah.
The other side of it, though, is that sequentially, that business in Q2 was up 83% and up in the 70s in the quarter before that. So the growth rate has come down. And a big part of that, if you remember the last few quarters, as the ads business really accelerated, Amazon's profitability just blew it out of the water. And I had said that was really a big indicator of just how much the ads business drops profits to the bottom line for Amazon. So it's a really important business. But when you see the shift from 83% to 49% growth quarter over quarter, that means that's going to hit their profits. And that's exactly the story of the quarter, that they really underperformed on profits. So it's just something that, it was going to normalize to some extent, and it's something that will need to be watched. I think everything in the ads business still has really strong momentum, but it's a really critical data point that will tell the story of Amazon's profits going forward.
So yeah, we should mention that, as you said, 50% growth last Q3, 50% growth this Q3 for other, which is advertising. The share of money made from advertising or other went from 5.6 to 7.3, so it continues to make up more and more of what Amazon makes. We've got 12% of digital advertising this year, of that money going to Amazon. And then over 13% next year, close to 15% by 2023, still 10 points behind Facebook by then and 12 behind Google, but definitely gaining grounds. How about a second figure for you, Andrew?
Yeah, so the other big high margin revenue stream is AWS, Amazon Web Services. Mm-hmm. And that one was up 39% versus year ago. And that's an acceleration. So AWS was a business that had started to see its growth rates taper off a bit into the high 20s and low 30s. And in the last couple of quarters, it's accelerated. It was 37% last quarter and 39% here this quarter. So I think in some sense, AWS probably saved the day. The bottom line hit would have been worse if AWS basically held the line on that growth rate, but it extended that growth. So that can, if this momentum continues in that business on a larger portion of revenue than ads, I think Amazon can see a really profitable next couple of quarters.
Yeah, that was the second strongest growth for a line item was AWS, that 39% behind other advertising, which grew 50%. AWS also gained 2.5 points of share in the last 12 months. So again, continuing to make up more and more of the pie for Amazon. Another one that jumped out to me, Andrew, was physical store sales. The physical store revenue grew for the first time for the first Q3 in a number of years. However, share did remain flat. What was the most surprising part of the earnings for you?
It has to come back to that online stores number of 3%. As I said, directionally, I was expecting that number to come down, but it gives me more pause than a normal quarter, the fact that it came down to 3%. And there's even some speculation that number has the chance to go negative in the holiday quarter. I don't think that's going to be the case.
Wow.
But it's something to watch out for. And it's certainly within the realm of possibility.
Mm-hmm. Shipping. I want to talk about that for a second. Supply Chain Dive pointed out that in 2020, Amazon shipped more parcels than FedEx with a 21% share of US parcel volume. So it overtook FedEx. That's good enough for third place now. And it's 3 points, just 3 percentage points behind UPS in second, and Aways from the United States Postal Service with 38% share in first. So it goes USPS number one, and then Aways behind that is UPS. Right behind that is Amazon, and then behind that in fourth is FedEx in terms of US parcel volume. Andrew, 7 years ago in 2014, Amazon had 0 share of the US shipping market. It relied on FedEx and UPS. It's also worth noting, though, in 2020, a record 4.2 billion parcels originated from Amazon per Pitney Bowes data, but most, 2/3, were passed to other companies for that last mile. But just their ability to become a dominant player in shipping, Andrew, just remarkable.
Yeah, I mean, they've been able to control their own destiny on a really important part of the logistics equation. If you were to look in my neighborhood, I would say Amazon has 85% of the market. But it's really incredible how they've ramped that up in recent years.
Yeah. Also profit, another thing that jumped out to me. Amazon made $3.2 billion in profit. That's about half as much as last year. But to your point about getting your house in order and kind of taking a hit for one quarter whilst you get things sorted, Karen Weiss, the New York Times, points out that Cohen estimates that in 2020 and 2021, Amazon will have spent about $80 billion, 80, in logistics investments versus the $60 billion in the previous 5 years combined. So 80 billion in those 2 years, 60 billion in the 5 years combined in terms of logistics investments.
And just one addition that I make to that, I mean, it's a great point, which is that in the last few quarters, Amazon's really ramped up their logistics spending, building more warehouses and getting more inventory closer to more people. That's going to benefit their business long-term in tremendous ways. You almost didn't notice that bottom line impact because the ads business the last couple of quarters papered over so much of that. Mm-hmm. And so this quarter, it got a little bit more exposed. But again, this is why I say just look at this one quarter as a blip, because Amazon's just continued to build a foundation for tremendous e-commerce growth into the next couple of years.
So I want to talk Q4 in a second, but just on a personal note, I got something delivered the other day. It came in a box and it was very small. And the box was quite big, and there was a bunch of packaging in it, which was kind of wasteful because it didn't need to come in a box that size. But it got me thinking, and maybe there's a reason for this, but why? Imagine if every company, FedEx, Amazon, UPS, USPS, if they delivered everything in a standard size box, if there were 5 sizes of box, and they were like those plastic boxes that, when they fold together at the top, the kind of teeth fold together. So if you had 5 standard sizes of box, then everyone could use the same box. You could use, after that box was finished, I wouldn't have to break it down and put it out on the curb for it to be recycled again and then made back into another box. You could just put it on the curb, similar to your recycling or your trash, and someone could come around and collect those boxes and then take them back to the retailers, and then they could ship other stuff in those same boxes, kind of like shipping containers. Shipping containers are all exactly the same size. And I'm wondering why we don't have some kind of shipping container style system for smaller packages for people. Is that a stupid idea?
It's your $1 billion idea, Marcus. I think you should quit your job today and go make it happen.
I've been thinking about quitting. I'm getting out of the podcast game. This is it. I'm kidding. I love this job. I was thinking that the other day, and it's also waterproof. Boxes aren't waterproof. Just a thought. Anyway, let's talk about Q4 instead of my ridiculous ideas. CEO Andy Jassy just took over from Jeff Bezos. He said, in this current quarter, we expect to incur several $1 billion of additional costs in our consumer business as we manage through labor supply shortages, increased wage costs, global supply chain issues, and increased freight and shipping costs. all while doing whatever it takes to minimize the impact on customers and selling partners this holiday season. Andrew, Amazon's Q4 guidance was between 3 to 11%. Wall Street's looking for 13. You mentioned that they said they could be in the red a little bit. What do you expect from a Q4 from Amazon?
Yeah, well, I think that was the overall revenue number from 3 to 11%. So that online stores number, if it was on the lower end, would presumably go negative. I think in general, we're going to see a strong Q4. We know the consumer demand is really strong. And I think we're going to see, an extended season here. And consumers tend to rely on Amazon because it's a reliable provider of inventory, even though it's dealing with out of stock issues, just like other retailers. I just don't see a case where Amazon doesn't perform predictably well. Again, they'll incur these costs on the bottom line on that business. But I think in terms of the top line commerce momentum, I think things will turn back up and they'll have a pretty solid, if not very strong quarter.
Going back to the plastic boxes, you could also borrow one from your neighbor who put one on the curb and you could use that to ship something back. Anyway, I'm done. Halftime report. Let's talk about that. Andrew, I'll ask you for a grade from Amazon's Q3 performance and then one takeaway from the first half.
I have to give Amazon a C- for the quarter. That's probably more charitable than others. I feel like others would have Amazon solidly in the D range for this quarter. But I think that there's enough bright spots that, as I said, is if things turn up in the commerce business, that the next couple of quarters will look just fine.
All right, time now for In Other News. But first, a quick word from our sponsor, Tinuiti. Media is no longer a mass reach vehicle. Fragmentation is an understatement. Media is now about connecting with people in a personalized way, in a way that respects their data privacy. Rethink media. Rethink performance with Tinuiti, the largest independent performance marketing firm across streaming TV and the triopoly of Google, Facebook, and Amazon. Find out how at rethinkperformance.com. All right, folks, we are back today in other news. Walmart's text to shop, more retailers launching stores, and Pinterest rolls out Pinterest TV. Story 1. Walmart is testing an SMS-assisted e-commerce tool called Walmart Text to Shop, writes insider intelligence analyst Nina Getson. She points out that we've been here before, kind of. It launched a shopping service called Jet Black in 2018, which was a $50 a month subscription that let customers text in orders to be fulfilled same day or next day. Andrew, will Americans want to text shop?
That's a really good question. I'm actually curious myself. I am the worst sample of one here. I look at myself and I do not want any commercial text in my text stream. I want only personal context.
Why can't they separate them? Come on. OS platforms, get together.
I don't want them there at all. It feels invasive. That said, people do it a lot of times a day. So some people may have a use case for it. It does seem like Walmart's answer to Alexa and that they're just trying to think through to the future in conversational and voice activated commerce, leveraging AI. I think it's going to take a while for something like this to take off, but should a retailer like Walmart, who has the resources, be thinking about things like this and investing in it? Yes, absolutely.
Speaking of Alexa and voice commerce, voice shopping is rapidly gaining popularity, with Juniper Research estimating that worldwide voice-assisted e-commerce sales will reach $5 billion this year, quadrupling to nearly $20 billion by 2023.
Marcus, I have to push back on that number. I saw those numbers and
talk to me.
I'm just not buying that growth rate by 2023. There's no way I see that market quadrupling in 2 years.
Even worldwide?
Even worldwide.
Yeah, there's no market that's really leading the charge. That's fair. 2023 is like tomorrow. Story 2. More retailers are launching brick and mortar stores in the latter half of 2021, notes Director of eMarketer Briefing, Jeremy Goldman. He points out that the ratio of store openings to closings through the first 3 quarters of 2021 is roughly 2-to-1 per research platform The Daily on retail. Dollar General, Dollar Tree, Family Dollar, and Five Below lead the way in terms of announced openings, notes CoreSight. Andrew, some store openings, some store closings. It seems like more openings than closings, according to this research. But how might these new stores look different, if at all?
Well, I mean, most of these are dollar stores, so I don't know that they need to look different. Their value proposition is low-cost goods, and they're going to be bolstered. I mean, this is already where the growth in stores has been for the last several years, and it's only going to be accelerated as lower income earners are seeing rising wages. So that's going to fuel demand. Other stores, there's plenty of apparel retailers and fashion lifestyle retailers that are opening doors this year in a way that they weren't in the past. I think we're going to see a lot more slimmer format stores. They're going to have a fresher look, a lot of them getting facelifts and more store digitization. That's the trend that I would look for with the new wave of store openings.
Story 3. Pinterest rolled out a shoppable live series called Pinterest TV, which debuted on November 8th. As Emma Roth of The Verge notes, each episode featured a creator from the platform, airing Monday to Friday at 6 p.m. Eastern on iOS and Android, where you could ask questions in the chat and interact with hosts. Shows covered different topics each day, ranging from fashion, beauty, home, food, and more. On Friday, the episode turned into a QVC-style shopping show where viewers could buy exclusive products from different brands like Patagonia, Crown Affair, Allbirds, etc., Miss Roth says. Each episode is also made available on demand via the TV icon in the top left corner of the Pinterest app. Andrew, your thoughts on Pinterest TV?
I love this idea. Everybody's after live streaming commerce, and it's been talked about in the context of, next generation home shopping network, or QVC, which, by the way, are really underrated, great retail businesses. I think that Pinterest actually can pull this off much better than others can. They reach the right demographic. It tends to be, skew more female and middle age, which is the core demographic of those two networks. I also thought their choice of Tom Daley as a creator was actually very inspired. He's very popular with that segment, but then also the knitting, right? The knitting that everybody saw. Yeah. It was too perfect. So I appreciate when you really pick the right spokesperson.
That's what we've got time for. Thank you so much, Andrew, for hanging out.
Thank you, Marcus.
Thank you to Victoria. She edits the show. Thanks to everyone listening in. We'll see you tomorrow for the Behind the Numbers Daily, the eMarketer podcast made possible by Tinuity. Okay, tell me I'm crazy with that idea. Is it stupid? Why have we not been using some kind of plastic container as opposed to cardboard boxes where you can get a million different sizes of box? I bought a towel, pulled it out of the box, and then the box just sat there. And I just was staring at it for 10 very awkward seconds. My life's thrilling. This is how I spend my days.
When you were talking about it, I was just shipping containers. And then you said, shipping containers.
Yeah, exactly. Exactly, yeah.